Good morning. Creative financing strategies. How smart borrowers are getting their deals done. Traditional mortgage still dominate the market, but today's most successful home buyers, their investors, as well as business owners, are using creative financing strategies to win deals, to reduce cash out of pocket, and to move faster in competitive markets. And in medallion funds, we structure financing around the borrower's objective and not just a single loan product. And below are the most effective creative financing tools borrowers are using right now, and also when each one makes sense. So you may be asking yourself, what is creative financing? Well, creative financing refers to non traditional or alternative mortgage structures used to solve timing, liquidity, or qualification challenges. And some of these strategies are especially useful when a borrower needs to buy before selling a property, or cash up is tied up in equity and could be used better in your pocket, or income is complex or non traditional, or when speed matters more than the rate does, and if a property needs work or repositioning. So there's bridge loans, buy now, sell later. A bridge loan provides short term financing that allows a borrower to purchase a new property before selling an existing one. And it's best used when buying a home before selling your current residence, or when acquiring an investment property quickly, or if you just want to avoid contingent offers and make your offer stronger. So here are some advantages: faster approvals, typically interest only payments, and they're flexible with exit strategies. And some considerations are it's going to be a higher rate than a traditional longer term loan, but also it's going to be a shorter term loan, so 6 to 24 months. There's also HELOCs and cash out equity lines. So a home equity line of credit, or a HELOC, allows borrowers to tap existing equity for down payments, renovations, or bridge capital. And it's best used when there's a strong equity position, or if you need revolving access to capital, or if you're looking at funding a renovation or investment. And the advantages there are it's interest only on the funds used. It's got a reusable credit line and a lower cost than many bridge options. But there's also down payment assistance programs who are a little tight on money. And many buyers, especially first time or moderate income borrowers, will qualify for state down payment assistance or DPA programs that they never knew existed. So these can include grants. Those are a little harder to qualify for, but traditionally there's going to be a forgivable second lien or a deferred payment loan, one of those three. But these programs can dramatically reduce your upfront cash requirements when layered correctly with a first mortgage. There's also alternative and non QM financing options. So this means for self-employed borrowers, investors, or high net worth clients, non-QM loans provide flexibility outside traditional agency guidelines through Fannie Mae and Freddie Mac. And some examples can include bank statement loans, or DSCR investor loans, or loans based on your assets alone, and can include interest-only structures. And these products will prioritize cash flow and liquidity over W 2 income. So let's look at combining some strategies for your maximum leverage. Well, the most effective borrowers often stack multiple tools, such as a HELOC along with a conventional purchase, or a bridge loan refinance to fund a new purchase, or a DSCR loan and then cash out, or to use DPA programs as well as seller credits to effectively get into a home with less money. And really, this is where working with a mortgage broker is going to add real value, and strategy matters more than the rates do. So you may be asking yourself, why do we work with medallion funds? Well, we're not limited to one bank or one solution. Our role is to design the cleanest execution path based on your timeline, your equity, your income profile, and your long-term goals. And if a deal feels complicated, it usually just needs better structuring. So here's some final thoughts. Creative financing is not about bending rules. It's about using the full capital stack intelligently. And if you're trying to buy, to invest, or to refinance, or even to reposition a property and want options beyond the obvious, creative financing may be the key. And that's what I'm here for. Please visit billrapponline.com to figure out how to get a hold of me. I'd love to talk more about your situation. Have a good day.